In this episode of the SLO County Real Estate Podcast with Hal Sweasey, Hal takes the reins as host and talks with Greg Burns of IPX 1031, a company that solely handles 1031 exchanges in real estate. 1031 is a reference to a tax code that allows you to defer your taxes in the sale of a property and transfer it to another replacement investment property. With the boom of investments in real estate over other commodities, getting as much knowledge as you can for this tax code is pretty important. That is why Hal and Greg are having this discussion in order to make sure you know. Whether you're an investor or looking to shift from commodities to real estate, whether it be in California or elsewhere in the United States, this episode is for you.
Welcome to the SLO County Real Estate Podcast with Hal Sweasey. I am Hal Sweasey. I'm the host today. Mr. James Bueno is on vacation. He gets to go once every 4 or 5 years. So I have a special guest. It's just going to be me and Mr. Greg Burns. And Greg Burns works with a company called IPX, and that is a 1031 exchange accommodator. Hey, Greg, why don't you tell people the company you work for, a little bit about what you do, how long you've been doing it, just so people know what we're talking about here.
Yeah, so IPX 1031 is a qualified intermediary, a accommodator, facilitator. We facilitate exchange transactions. We've been in the business for about 28 years. I've been with the company for about 23. And so we facilitate 1031 exchange transactions all over the country.
Let's kind of start out with a couple of basic questions. Why is a 1031 exchange? What does that mean, and how is that different from someone just selling their home?
So 1031 is a section code that follows investment property. So, your primary residence is covered under section 121, which says basically if you live in a property for 2 of the last 5 years, you can take a $500,000 exemption if you're married, or a $250,000 exemption if you're single. And 1031 is the tax code which covers investment properties, which allows investors to move between investment properties without having to pay taxes every time that they sell them. So it's a way that you can sell an investment property and defer the taxes on the sale of that property into a new property.
Real estate is really tax preferred as an investment. I mean, obviously, I don't know anywhere else where you can have a gain of $500,000 and not pay taxes on it for most normal people. So that's pretty special. And you can't take stocks and sell them and do a 1031, can you?
You cannot. So only real estate qualifies for that. And as you're aware, that real estate has all kinds of tax advantages.
So one of the things people get worried about is some of the restrictions with a 1031. What are those in terms of like timing and that sort of thing?
I think that one of the things that people hear a lot is like-kind exchanges. I got to buy a like-kind property, so I own a residential single-family home. Does that mean I have to go buy another residential single-family home? Or maybe they're, selling their business and they want to use the funds to go buy maybe a residential property. So the rules, the like-kind rules for real estate are pretty broad. They just basically say that if you hold the property as an investment and it's real estate, that you can use those funds to go buy another property that you intend to hold for investment or business use. And the timelines can be a little tough. Probably the hardest part of an exchange is locating that property within that 45-day identification period. So you have 45 days from the date that escrow closes on your sale to identify the property that you'd like to purchase, and then you'd have another 135 days after that to get it to close. So it's a total of 180 days.
Gotcha. Yeah. It's interesting how me, because I do both, I've done them personally and for clients, do a regular sale, and I still have a lot of clients that go, well, if I sell my home, do I have to go repurchase another home? And on your residence and your primary, it's just a separate transaction, so no, you don't have to. On the 1031, you do. What are some of the trends you're seeing from your perspective, because you're in the middle of all these 1031s, in terms of like, what are a lot of your clients doing, moving out of a certain type of property or an area? What does that look like for you these days?
I think right now we're seeing a definite flight to quality. So we're seeing clients that are, maybe exchanging out of properties in areas where, I think the last recession that we went through is still kind of fresh on a lot of people's minds. And so I think people are moving into areas, like San Luis Obispo, where, the market conditions didn't change as much. They're selling out of areas, like maybe a Santa Maria, where, they took a bigger hit. So we're seeing definitely a flight to quality. We're also seeing, clients that are exchanging to passive types of investments where they don't have to be active property managers anymore. We're seeing a fair amount of exchanges out of state. We're seeing, properties in, exchanging from California to places like Tennessee is a big market. We're seeing, in fact, I would probably guess that maybe we have single-handedly, as Californians, have doubled or tripled the value of real estate prices in Idaho over the past probably 24 to 28 months.
Right.
But we see people doing exchange 1031's a federal tax code, so you can exchange anywhere inside the U.S. So we have clients that are exchanging for all the properties all over the country.
Yeah, it's interesting that you would say that, because in my personal experience here, there seems to be a lot of 1031 buyers here, meaning they've sold something or they're in escrow and they need to repurchase. And I try to explain, and they might be purchasing something that's someone's residence, but they'll use it as an investment for a while. So let's talk about that. If someone has a little house they bought, they were young and they moved out of it, but they kept it as a rental, and it was in San Jose, and they paid $300,000. Now it's selling for $1 million. And I know that's too low, but let's say they got $1 million. They don't want to pay taxes, so it's probably $1.5 million. And they buy a house in San Luis Obispo. They can't move right into it, can they?
No, so we do have kind of a lot of people doing that kind of issue where they're saying, okay, you know what, I'm going to sell an investment property and I'm going to buy, let's say, a property. We see a lot of people doing it, and I know, also see a lot of people doing it from the Central Valley. They go from the Central Valley, kind of buy coastal, and with the ultimate goal, I think, of maybe retiring there or using it as a second home or a vacation home. And you're right, with 1031, we've got to hold that property for an investment. And there's actually a revenue ruling that says any property that's been held as an investment for 2 years or more, in an audit, the IRS can't challenge the held for investment portion of the exchange. So as long as those clients hold that property for at least 2 years as an investment, then they can pretty much kind of do whatever they want with after that.
Okay, so then it would qualify for them to move into if they so chose, right?
Yes.
Their exchange is legitimate and it can't be overturned or whatever they would do in that case.
Right.
Interesting. I read about this, and it's hard to predict where any laws will end up, but there's a lot of discussions lately about modifying or removing the 1031 exchange. I think I saw one just briefly, and please correct me, and I'm sure I'll be wrong on this, but like maybe the current version said you can do an exchange, but anything you gain over a certain amount of money is then going to be taxed. And I know, of course, we have a huge deficit, so they're trying to find ways to raise money. What do you hear about those types of things?
It's a good question, and I think it's on the forefront of a lot of investors' mind. When our current president was running for election, he mentioned that he thought 1031 was a tax loophole that should go away or be limited. That wasn't a surprise. When President Obama was in office, he also tried to limit 1031 to $1 million for an investor. So when President Biden was elected, he mentioned in his Green Book proposal that he thought we should limit 1031 exchanges to $500,000 of gain for an individual that you could exclude, or up to $1 million for a married couple.
Okay.
So this is something that we have been working on for a very long time. Topic that's, for obvious reasons, very close to my president's heart.
Sure.
And so we have had, I think, more than 300 meetings with elected officials. I think we've done more than 35 fundraisers for elected officials. We've had 2 economic studies done on this particular topic on 1031 about the effects that it would have if you did away with it. And what we found is that if you eliminated 1031 or severely, kind of limited it, you would gain about $19.8 billion in revenue over the course of 10 years. But you would lose $39 billion of revenue from revenue sources like, real estate agents and escrow officers and title people and inspectors and mortgage brokers. So it really ultimately ends up shrinking GDP. So it's kind of a net loss for the government. The House Ways and Means Committee on both sides of government, on both the Republican and the Democrat side, they both understand the importance of 1031. So we are feeling pretty good that it might stay in the tax code, but you do have a new bill coming into place right now where they're looking for pay-fors. And 1031 is always one of those things that they look at to pay for some of those bills.
Sure. Well, I think if you took away the personal home residence deduction, right, from $500,000, I think a lot less people would even sell their homes.
Yeah, I agree with that.
Yeah. So what it does is it just shrinks the number of people that would move and locks them in there, because why would I give away, especially when you've been accustomed to it, right? If it never occurred, probably be different. But at the end of the day, it's like, well, I can take this tax-free and I can go buy another house. But if you had to pay taxes on all that, then that limits what they can buy. They go, well, I'm just going to stay here and not sell my home. So I can see how that study makes some sense, I guess. So we'll wait and see what happens on that. Any other uses? You mentioned businesses, and I wasn't really that familiar with it. So if somebody owns a liquor store, or if they own an accounting firm, can they sell that, or does it have to be real property?
Yeah, so it does have to be real property. So when I'm saying, hey, someone's selling maybe their business, maybe they own, a widget making company where they make widgets, they own machines inside the building, but they also own the building and the land itself, so they can trade that. We see clients that do exchanges on gas stations where, obviously the goodwill portion is not able to be exchanged, or any equipment's not able to be exchanged, but the actual land could be part of the 1031.
Yeah, thanks for explaining that. And can we get into costs? A lot of people want to know about logistics and costs, and you as the expert, I'll let you explain. I have my limited knowledge, but logistically, besides the timing, is there much else somebody has to do?
You just want to make sure that you get the exchange set up before escrow closes on your sale. Fees are typically, they range in price probably from the low end, $750 on up to a couple $1,000, depending on whether it's residential or commercial.
Okay.
We just charge a flat fee of $1,000, so you can figure somewhere right in that range.
And then, if I remember, there's some documents that I just, to simplify, tell people it's just like having a little separate escrow set of paperwork that you're going to sign. Would you describe anything else that someone needs to know about that, so they're not intimidated by the process?
We do have a fairly lengthy set of documents, but it's really lengthy to kind of protect them in the event of an audit.
Yeah.
But you're kind of right. When someone asks us what we do, most of the time what I will tell them is we act like an escrow between your sale and your purchase. So
Greg, people call us, they need to comment or give your name, but do you mind sharing your contact information for our listeners? Because if somebody has a question about a 1031, what areas do you serve, and maybe just say a little bit about that? Yeah, so we cover kind of Southern and Central California. They're welcome to call me. My phone number is 626-233-2773. We're a national organization, so if you call our 800 number, we have 16 offices across the country. So, no matter where your property is located, we should be able to help you with an exchange. Not to put down any accountants, but when people have questions about exchanges, you're always nice. I can give people your name and number to ask you their questions, and I think it's an area of specialization that you know better than probably most anybody. That's just been my experience. Advantage. Yeah. Like 100 different tax codes. I only need to know one. You just know the one. You're an expert in that one tax code. Good for you. I love it. Yeah. Well, Greg, hey, I think this will be super helpful for our listeners. I really appreciate you taking the time, and thanks for all your great work over the years. Yeah, great. Nice to talk to you.
Thank you for listening to the Hal Sweasey podcast. Be sure to subscribe and rate this podcast. It comes out every Monday, so check for it in your feed for the latest information on the San Luis Obispo County market. The SLO County Real Estate with Hal Sweasey podcast is available wherever you get your podcast and on halsweasey.com, where you can find current listings and other real estate tips. halsweasey.com, that's HALSWEASEY.com. I am James Bueno, Director of Marketing for the Hal Sweasey Group. If you're looking for anything real estate, give us a call, 805-781-3750.
Hal Sweasey is a licensed California real estate broker. DRE number 01111-911. The SLO County Real Estate with Hal Sweasey podcast is a production of AGM Podcasts. Subscribe wherever you get your podcasts.